Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Wednesday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So today I wanted to give an update on what's going on in the mortgage market. Had been doing these videos kind of every week. I do them a little less frequently, but kind of same format as I had been doing. So right now, rates have been steadily getting a little worse the last couple weeks, but there's good news behind that. So if you saw my video on things that I'm looking for in 2024, the big one was, when is the Fed going to cut rates? And as I've said in that video, as I've said in a lot of my newsletters, the market has been expecting a rate cut in March for a while. And I've been saying I don't see that happening because of how inflation is going down, but not as rapidly as I think it would need to. And that combined with the fact that the economy is staying strong. And the last few weeks has only continued to show that, as all economic reports have been as expected or showing that the economy is doing better than we expect. What's good is that the market is now slowly starting to come to terms with what I think is the reality, which is that we're not going to see a rate cut in March. I've talked before about how the Fed rate is not the same as mortgage rates, meaning if the Fed does a quarter-point rate cut, that doesn't mean necessarily that mortgage rates are going to come down a quarter point. It's a common misconception. However, what the market expects the Fed to do relative to what the Fed actually does very much affects mortgage rates. And that's what's going on right now, is the probability of a rate cut per the CME group, which is kind of the gold standard for tracking Fed rate decision probability, has steadily gone down. The likelihood of a rate cut a month ago was 75%. Now it's down to 40%. So and rates have gone up, but they haven't gone up dramatically, which gives me optimism that as the market continues to come to terms with that reality, rates will probably go up, but not drastically. So looking past March, I think May is the first semi-realistic month that we might see rate cuts. And what is going to lead to the first rate cut is inflation coming down to what I think is going to be like a 2.6 to 2.8 range. And when I say inflation, I mean core PCE inflation. I think based on the Fed, what they said in December is their expectations of overall inflation by the end of this year and how many cuts they think, that is the range where we could see a rate cut. This Friday, we have December PCE data. So depending on how that is, that may increase the likelihood that I think we have a May rate cut, or decrease it if it comes in above or below what the expectation is. So as always, I'll put out more videos as news comes in that I think is important, or as the market is making a shift one way or another. As always, if you have any questions about anything in this video or any market related stuff, shoot them below, or call or text me on my cell phone, or feel free to email me. But thanks for tuning in to this one, and I will see you next time.